Barry, this is such a joy to do. As we just said, I've stalked you for many, many weeks now with references from Gustav, from Daniel, from so many others. So thank you so much for joining me today.
Oh, it's an absolute pleasure.
Now, I would love to start with a little bit of context. We look at the incredible journey you've had, and I'm going to skip a few steps in between, but I'd love to know, how did you make your way into the world of startups first? And then how did you come to be CEO of Peloton most recently?
Well, I got involved in startups in the not to date myself, in the 1980s when I was at First Boston, and they pulled together an investment pool, and we're investing in startups, and I was invited to participate in that group as a venture capital investor, and I spent 7 years doing it, and I made just about every mistake you could possibly make. But along the way, I realized that I wanted to be an operating guy, and then it took me quite a while to convince someone to hire me in my first operating role. Eventually, that led me to Reed Hastings' doorstep in 1999 when Netflix was quite small. I think I was the 40th employee, and then the rest is sort of history. And then with respect to Peloton, I was comfortably retired and an avid Peloton fan user, and had many years of successful association with TCV, both co-investors in Netflix and co-investors in Spotify, and read about some of the difficulties in the business and thought it was particularly relevant coincidentally with things I'd done in my career that gave me some insights into maybe some of the challenges they were facing and possibly some of the fixes. And I was anxious to play another big game with an iconic brand, which Peloton is. And fortunately, I was able to convince them to give me a shot at jumping in and turning it around.
I'm sure that was a tough decision for them, looking at your incredible journey. I do.
I'm not everybody's cup of tea. Let me put it that way.
We'll get to it. I heard some weaknesses too. I'm fascinated. And I'm sure Ben told you I go off schedule a little bit. What was Reed like back in 1999? We see this incredible leader today. What was Reed like back then in 1999?
Well, his original vision was to be retired and to fund the company and be its chairman. And the performance kind of got sideways, and he came in off the sidelines and replaced Mark Randolph as the CEO. And then the very first thing he did was to bring in Patty McCord and rebuild the entire team. And so I came in as part of the rebuilding, and it was then an a la carte business. Now, he had been very successful building a company called Pure Software, which he ended up selling, and been taken public by Morgan Stanley, and I think was maybe the second most successful IPO of all time, if I'm recalling correctly. A little bit out of my depth there. And in hindsight, I think he wished that he had had the opportunity to build it in a slightly different way. He had been a first-time CEO at Pure, and this was his do-over in effect. And so he was quite deliberate in the way that he built the culture. And measured performance, and then eventually we found product market fit. It's a subscription model, as it turned out, not as an a la carte business. And once we stumbled into the subscription model, the business literally started doubling each year, and for 5 or 6 years, it just kept doubling.
Barry, I do have to ask, without being too much of a therapist, I always believe we're all functions of our history, and you've never been on a podcast like this before, my friend. So what are you running from, and what are you running towards?
Running from boredom, and whatever the antidote for boredom is what I'm running to. I love the game, and I love being able to play on a team. Let's see, if I was used a musical analogy, I say that the kind of music that you can play as a soloist is quite a bit different than the music that you play when you're in an orchestra. And I find the orchestral music to be particularly engaging. My whole life, I've been involved in organized sports on teams in high school and college, and I miss it terribly when I'm not playing on a team. And for me, business it provides that opportunity. We happen to be associated with, physical fitness, which has also been a important part of my life. And so the mission and the values of the business happen to resonate with me personally, but it's mostly the opportunity to do it with a group of folks.
Listen, I deeply agree. Having gone through COVID, I felt like Olivia Amato got me through COVID, and it's got nothing to do with my crush on her. I promise you, it's the engagement. But I do have to ask you, I spoke to, you mentioned team, I spoke to Daniel before, I spoke to Shaq before, and they said, you've got to ask, why did you move from sunny California to the cold, dark Stockholm? What was it that compelled you to join Spotify at the time?
Daniel, music. I knew music from my previous life at a company called Music Choice, and from my experience on the board of Pandora. Spotify owned Cool. Daniel was using my pattern recognition skills as exceptional in his own way as Reed was exceptional in his way, kind of, 1 in 25 million. It was a unique opportunity to work with someone that I had come to admire and trust. I had been on his board before he invited me to join the management team. Stockholm was not on my list of places to live for sure, and I terribly missed California. On average, living in Stockholm was great. In the summer, the sun never goes down in it, and it's one of the most beautiful places on earth. And in the winter, it's one of the most
depressing.
Yeah. So that was a little bit of a struggle. But I would say in comparison to the life we led in California before we moved to Stockholm, it was an absolutely fabulous experience. We led a relatively small and insular existence in Silicon Valley, and we had a much bigger life, much more adventuresome in Stockholm. And so reflecting on those 2 years, it was a terrific opportunity, and interesting enough, it brought my wife and I much closer together. It could have gone south pretty fast, but since we were in a foreign country, we didn't speak the language, and we were sort of dependent on each other. And she actually still has friends that she engages with in Stockholm in a book club. Anyway, eventually we moved to New York when Daniel asked me to also run the ad business, and it was kind of sad to go, but it was tremendous fun while we lived there.
Can I ask you a weird question, which is, when you're running at the top of your game as you have done for so long, what are the secrets to a successful marriage? This is clearly something I have not mastered.
Well, I failed miserably the first time. We have shared values and we have common interests. We actually like being with each other. And interestingly enough, most of the success I've had in my career has come after we met. So I would say that, that she's been very much part of it.
You mentioned Daniel and how he was so central to your decision to move to Spotify. He described you before the show as the best strategic CFO or deal maker in the world. Why do you think he said this, and what do you think makes you so good here, Barry?
He probably said it because he hasn't met most of the CFOs in the world.
It was a large data set. But really, what do you think led him to say that?
Well, look, we were a great team and we had a terrific run together and a lot of success, and we broke new ground. We were quite compatible. I wanted to do new and interesting things, and he's particularly interested in new and interesting and smart things. And he's a risk taker in ways that were appealing to me. And two, I had a skill set that was complementary to his own. And so we never stepped on each other's toes. And he absolutely has skills that, from a product perspective, that technical skills that for running engineering teams that I don't have. And I would say the business model from a financial perspective was sort of a mess when I walked into, well, there was a lot of low-hanging fruit, let me put it that way, when I got involved in Spotify. And so the partnership worked really well at a personal level and professional. Maybe that's why he said it.
Well, I mean, one of the reasons I'm sure is your innovation around direct listings and how you played such a pivotal role with Spotify in terms of the direct listing. And I spoke to Jeff Jordan at Andreessen as well. I told you, I really stalked you. And I spoke to Jeff and he said, you got to ask about direct listings. Why do you feel direct listings are better? And what do you think you saw that others didn't see about the direct listing model being so good?
Well, there are a couple of things to unpack. As it relates to direct listing, it's a drug that's very effective for addressing, certain kinds of clinical circumstances. But it's not for every occasion and not for every company. Point one. So at Spotify, I was trying to solve a particular problem. I wasn't trying to reinvent the going public thing. I will say very much to Daniel's credit. I walked in the room and I very intentionally said to him, hey, I have this crazy idea to do something that's never been done before. Now, there are an awful lot of CEOs and boards I know who, if you were foolish enough to say that to them, would go, whoa, 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 whoa. And Daniel was like leaning forward in his chair and couldn't wait to hear what the idea was. So, 1. 2, when you take a company public, you need to sell enough shares for there to be a liquid market. Mm-hmm. And you dilute the existing shareholders. The typical rule of thumb, you're going to raise sort of 12% of the market cap of the company, 10 to 15, maybe as low as 7, if it's going to trade by appointment in the aftermarket. Okay, so for us, that would have been well north of $1 billion. We already had $1 billion plus, several billion on the, I don't even remember anymore, lots of billions on the balance sheet, and we didn't know what to do with the existing cash. We certainly didn't need any more, and the existing investors had no economic incentive to dilute their ownership interest to raise more cash that we weren't going to use productively. So how do you solve that problem? That's what got me thinking about the direct listing as an alternative. So the question for the lawyers was, the securities lawyers, is, okay, well, how do you go public without actually selling stock? Is there such a thing? How would you do it? And so we ripped off an existing structure, mostly used by companies that are coming out of a bankruptcy proceeding or are being spun out of large public companies, and then used it in a novel way in the IPO market. I think the thing that most people don't understand, even very experienced bankers have to point out, the stock opens in a direct listing exactly the same way it opens in a traditional IPO, which is exactly the way it opens for already traded public companies.
Cass, do you think we will continue to see many more direct listings moving forward?
Well, not in the current capital environment. And that's because public company shares are trading at such a steep discount that the only way you're going to get a company public is if you essentially promise to the institutions who are going to buy the IPO a big pop in first day trading.
And you're not going to get that at these prices.
And that's a traditional offering.
Yeah. No, I totally get you in terms of the pop. Can I ask a final one before we actually get to how you work? But it's just on kind of the move to Peloton. This was your first time adopting the role as CEO. Without sounding strange given your incredible career, but were you nervous about being CEO for the first time?
Yeah, a little bit. Actually, it was Daniel who talked me into, it was Daniel and a very successful venture capitalist who'd been on the Netflix board for a long time, named Tim Haley, both of whose counsel I had sought, and my wife, together got me thinking about the CEO role, because initially I was talking to Peloton about a COO role. I wasn't entirely sure that I had the chops to actually step up. But in the course of understanding the challenge ahead in the business, I thought, well, the only rational way to actually do that is if I can be assured that at the end of the day, I have the final say about how we manage through the turnaround. Because different from Daniel, where I had a relationship of trust, and I'm not throwing shade at any of the founders, we didn't know each other, and I didn't know if I could trust their judgment or not. We just simply were unknown to each other. And that was more risk than I was willing to take.
Can I ask, when you have that decision, you have the pros and the cons, and when you thought about the challenges that you were maybe nervous about, are the challenges that you were nervous about the challenges that you face today? Is it what you expected in terms of the hard things, or are the hard things different?
Super good question. So I knew that from experience in situations like that, you don't know what you don't know. And so you're absolutely going to discover things that will be challenging to you, and you're going to have to be good enough in real time in order to figure out how to deal with those black swan events. And we had a couple, we'll just say straight up. and maybe a few more than I was anticipating, but we've been able to navigate them successfully. Let me say, the biggest surprise to me is the amount of emotional resilience required of a CEO in a situation like this. Because people don't come to you when things are working well. And in a turnaround, almost nothing's working well. And so you're like a constant firefighting mode. And it's just one mess after another is, arriving on your desk that needs to be dealt with. And you need to both have the intellectual horsepower and the emotional energy to fix it, and you need to also be able to lead and motivate the people you're trying to fix the problems with, and this is where the emotional resilience, comes into play, because it does eventually grind you down, but that's not a formula for successful leadership. You got to motivate the troops. At the same time, you're trying to solve all these problems. At the same time, you're trying to manage your own emotional state.
Barry, I think turnarounds are a bit like Matt Wilper's endurance rides. They're hard, they're long, but at the end you feel pretty good. You do. That's how I equate it.
Yeah.
And you might need a banana halfway through for some energy. But I want to go to you mentioned the emotional resilience there. In terms of your performance, obviously Peloton is a company of performance in its sporting endeavors. When you think about the words high performance in leadership, what do they mean to you, having seen also many different organizations?
It was Reed Hastings who taught me the importance of business models. So first and foremost, if you don't have the right model, you can't win. Or it would be enormously difficult for you to extract competitive advantage and sustain those advantages in a way that enable you to be successful in the marketplace. So first and foremost, you have to have the strategic chops that enable you to think about your business model, its inherent weaknesses and strengths, and how you can leverage it for the future success of the business. And then secondly, great leaders are all about talent density. It's both the ability to recognize talent for what it is, and then it's the ability to hire it, to recruit it, get people to want to work with you. And then lastly, it's the ability to extract from that talent every ounce of their talent and getting them to perform at a high level for the benefit of the business.
So I have a couple of things I have to unpack there. You mentioned competitive advantage. What would you say is Peloton's biggest competitive advantage today?
This is going to sound overly simplistic, but it's not. And maybe as a user, you'll be able to relate to this. The brand is golden and the user experience is platinum, and always has been. So there are many mistakes that have been made along the way, but from the get-go, it's had product market fit. And despite all of the foot faults, it has never once damaged the product market fit. And so there is an army of consumers who are pulling for the success of the business because they absolutely adore the user experience. That's the primary success. That's the asset. It's the content that we have. One. Then two, I would say, Mike Moritz put it best when he was talking about the Instacart business, but it absolutely applies to the Peloton business. COVID was the marketing campaign that Peloton never could have afforded. And the growth that happened during COVID propelled the business to scale in a way that no other company in the space, to a level that no other company in the space has achieved. And that has afforded the company access to capital that it wouldn't otherwise have, and has made it the dominant player in the connected fitness category.
This is what I go back and forth on actually in my mind, which is obviously COVID's a terrible thing and obviously terribly sad it happening, but was it a good thing for the business or not? Because it also placed a huge amount of unnecessary expectations and pressures on a company that maybe wasn't ready for such hypergrowth overnight.
What has made, among the things that it makes Reed Hastings such a great executive, and I would say Daniel, great executive, one is that they deal with the world as it is, not as they want it to be. And they process data at a bit rate that humbles most of us. And they have the capacity to pivot based on the data that they ingest at a pace that would make most people's heads snap, Reed in particular. I would say that the Peloton team didn't exhibit that capacity, right? Imagine that COVID was going to be the new normal. Now, in 2020 hindsight, kind of hard to see how that was a logical expectation, but we weren't in their shoes at the time. So, what is what it is. Whereas Reed, at least at Netflix, for the most part, not entirely, but for the most part, and Daniel, when he pivoted into podcasting, have been able to anticipate read and streaming, let's say, by way of example, reinvent the business model in important ways that anticipated fundamental shifts in consumer behavior, and then they've been able to surf those waves. So, there is a scenario where you could have scaled it and then anticipated, in a post-COVID world, it was, going to be the shift and position for the shift. But there aren't many companies. I mean, we're talking about a very few truly exceptional CEOs who, could have taken that information on board in an anticipatory way and repositioned their businesses because of it.
Can I ask you, you mentioned their talent as well. I'm trying to hire, and we both know that the top 1% increase company trajectory tenfold. And I'm trying to hire a top 1%, and their argument against joining is just loyalty. I've been there for 10 years. My team is there. Loyalty. You've acquired some of the best talent over the years. How do you argue against loyalty when that is what you're fighting against in the bid to acquire an incredible talent? For myself here, you're helping me.
As I've said to our employee base here, and as we said to the employees at Netflix, we are not a family. We are a professional sports team, and you will want to work here because you will be afforded the opportunity to work with some of the most talented people in the business. And because of their talents, we will all succeed. But if we, as managers, make the mistake of hiring someone who we send down the field to catch a pass, and that person keeps dropping the pass, that puts the entire business at risk. And so, we will swap out that player and put someone in who actually can catch the touchdown so we can win the game for the benefit of the entire employee base, right? So in spite of the loyalty. So I was at Netflix for 12 years. On to God, it wouldn't have surprised me in the least if on any particular day that I'd walked into work, Reed had walked up to me and said, I think it's time to make a change. Now, that's not for everybody. I mean, everybody says they want to be many people say they want to be a gunslinger, but once the people start getting shot, not everybody thinks that's such a good idea. Did I worry about it every day? I didn't worry about it on any day. I just, you just learn to accept it and move on. Be confident in what you do and do it to the best of your ability, and it is what it is. And if you're good at it, you get to play another day, and if you're not, you go someplace else.
Totally agree with you there, especially on the professional sports team, not a family. But you also mentioned the bit rate of Reed, of Daniel. It's funny you say that because Andy Ratcliffe, someone said that you are an exceptionally quick and analytical mind, one of the fastest that he knows.
Well, that's coming from a guy who I find it very difficult to keep up with analytically.
Well, I mean, Andy knows many people. He's been around a fair few times.
Yeah, sorry, for everybody's benefit, Andy was a founding partner at Benchmark and is on the faculty at Stanford B School and was the founder and chairman of Wealthfront. So he is enormously accomplished.
So with that in mind, what's your framework for problem solving? You said about emotional resilience earlier. When the problems come, what's your framework for problem solving?
Well, the first thing I do is, I'm not sure of the answer about that. It depends on the nature of the problem. It depends on whether I have functional expertise or not that makes me competent at diagnosing the problem. My experience is that oftentimes the way that people articulate the problem and the solution is relatively uninformed because they have misinterpreted the underlying data or they haven't done the data analytics rigorously enough to understand the full scope of the problem. And so I just start pulling on strings and trying to get to a basic understanding of the root cause. And I try to understand the data that informs us about why we think the nature of the problem is what it is. And then I just follow the data and see where it leads.
How do you think about the trade-off between speed and quality when making decisions? It's always something that I struggle with.
I think that Jeff Bezos at Amazon provided us both a really helpful framework for how to think about the answer to that. It begins with this concept of whether it's a one-way or a two-way door. So if you can make a decision and you can undo it, then you can afford to move a lot faster with that decision than you can if it's an irreversible decision that you're going to make, which you described as a one-way door. And if it's a one-way door, then you really want to make sure that you got all your ducks right. You fully understand the scope of what it is that you're deciding and what trade-offs you are making as a process of that decision. And if it's a two-way door, you could move faster. You can afford to be wrong. Let's take by way of example the expansion of our business into third parties with Dick's Sporting Goods and with Amazon. Is it a good thing or a bad thing for the business? The only way to know that is to actually do it. And if it doesn't work out, then you stop partnering with them. We can all agree, reasoning from first principles, that we need to be wherever our customers are buying hardware. And so seems like it's kind of a no-brainer, but you could be wrong, and you just got to get started.
The thing that most founders get wrong is they don't have milestones or signposts for what is wrong, and so they just let it continue and continue. When you think about, like, as you said that, the only way you know with Amazon is to try it, what is the sign of success versus failure when you look at that in particular as a guiding post?
I will say, by way of answering the question, that it's super helpful sort of before you start down a path to try to define for yourself what success looks like. So when you get there, you know it, or when you're falling short, you know it. Just like if you're going to buy a company, you're thinking about buying a company, it's really helpful before you start the bidding process and the emotions kick in to decide where you're going to draw the line from a pricing perspective. What's your walk away? So we definitely had some very specific goalposts in mind when we thought about direct listing and what success would look like, by way of example, before we started.
What's the signpost of success with Amazon?
It's a decent margin. We bring in an incremental subscriber, a user from, say, a demo that we hadn't previously been able to access. So if all we do is, if they would otherwise have purchased directly from us at a higher price on our own website, that's probably not success. But if, because of the Amazon name and the reach of Amazon's website, we're able to access a consumer that we wouldn't have otherwise, then probably it's additive to the value of the enterprise.
I have to ask, when you're making a decision, there's always lots of different opinions. And we mentioned potential weaknesses earlier, and you very humbly mentioned it. When I spoke to some, they said that you have zero tolerance for BS. When you think about hearing lots of different opinions, how do you manage and deal with BS as a leader, Barry?
I could do that better. No, not very well.
So how do you deal with it? Because right now I just get bluntly frustrated and visibly angry. That isn't productive, actually. And people just...
Yeah, I agree. And I'm susceptible to that in high pressure situations, and particularly when I'm being surprised with negative news that is inconsistent with the mental model that I'm bringing to the conversation, or with people who are advocating for a position that I think is not well reasoned and don't have the data to support the position they're advocating for. I can get frustrated pretty quick. And as you say, it can be really demotivating for the team. Yeah. And so if that's frequently your MO, people don't want to work for you. Yeah. And the good people will leave. You try to strike the balance between being inclusive and listening. People want to be heard. It's not important that we all agree, but it's important that people feel like they've been given the opportunity to voice their point of view. And then I think it's important, if you disagree, Daniel was particularly good at this, at articulating the reasons why you are deciding to do whatever it is you decided the business should be doing at that particular point in time. So people can at least understand what you're disagreeing about that has caused you to reach a different conclusion perhaps than they've recommended. And if you can do that in a balanced and a matter-of-fact tone of voice and take the emotion out of it, it's pretty successful. And I'm less good at that.
I might have heard. But
yeah,
you said,
for better or worse, I play with a lot of passion, and and there's a place for that, but it's not.
I've got to ask you said about disagree there a couple of times. I think Gustav before said on the show with me, about disagree and commit. And I don't know if I really agree, to be honest. I don't know if people can really commit when they really disagree. How do you feel about the disagree and commit as a management philosophy and action?
I think we do it pretty well. The decision-making process in a Swedish culture and at Spotify can, at times to an American, feel a little bit like watching the paint dry. The amount of time that Daniel invests in allowing the organization to work its way through the decision-making process when, in fact, he's already made the decision. He's just waiting for everybody else to catch up to the decision he's already made. It just seems to an American like a complete waste of freaking time. And they certainly don't move in Silicon Valley time. I'll give you an example. There was a point in time very early in, before the world had discovered AWS and its progeny, that's where the world was moving. And so he decided overnight, literally, that we were moving to the cloud. And there was no discussion, there was no debate, and he had no interest in tolerating any discussion or debate on the subject. And so if you were an engineer and you disagreed, you could leave. Those are your choices. You get with the program or leave. Okay. Well, that kind of decision would have taken, maybe 3 or 4 months at Spotify, even if Daniel had decided overnight that we were moving to the cloud. But he would afford the organization the time that it needed in order to reach its own consensus. Now, the Swedish culture would say the benefit is once the decision is made, people commit, and there's none of the passive-aggressive kind of behavior that you see in U.S. companies where, people aren't really committed. They're behind the scenes trying to deep six the strategy change because it's, wasn't really there. Okay, so where does that leave us? If everybody's playing on the same team for the benefit of the organization, it needs to be absolutely clear who owns its decision, and all the people who don't own it are free to weigh in on the different pros and cons and express their point of view. But then we're going to hold the person who owns the decision accountable for the results of the decision. And if you have the right people on the team, then more often than not, you'll have a terrific batting average. It won't get everyone, but they'll get most of them. And that's why they're there. So I'll share with you an example. Early in the history at Netflix, Ted was running content, Reed was running the business. Periodically, as the quarter progressed, we would assess our performance, and if we were running out of budget, we would scramble to figure out how we could reallocate it to marketing or content or something else. In this particular quarter, we had, $30 or $50 million to spend, and Reed really wanted Ted to invest it in feature film content, which Ted thought was a really stupid idea. And so they argued about it for weeks, and finally, Reed can be relentless, and Ted finally gave in, and so he invested in it. And then it was clear almost from the start that it was a huge mistake because none of the subscribers were engaging with the content. It was a complete waste, and what we should have invested in was television shows, serialized content instead. And so then Reed proceeded to just beat Ted over the head for having invested in the content, which, of course, everybody on the team thought was incredibly unfair. And Reed's point was, look, my job is to advocate for what I think is best for the business. Your job is to keep me from running us into the ditch, in your area of expertise. You own it. I'll advocate, but you own it. It's your decision. So if you're going to surround yourself with really talented people and ask them to play at a high level, you need to give them permission and authority to actually own their decisions. And maybe once in a blue moon, you might decide that it's time to move to the cloud and the whole company is pivoting and, turning right. But the rest of the time, you can be an advocate, but they get to own it. And that is the approach I've taken in assembling and running the team here. And it does afford you the opportunity then to, get buy-in and ownership and drive performance, or at least that's been my experience.
Yeah, no, in terms of decisions and accountability, boards are often at the center of core decisions. You've sat on some of the best boards. What makes an amazing board to you, having seen so many different types?
Yeah, I wrestle with this. I would say managers manage and board members don't, and that's important to bear in mind. The best board members tend to be operators who are strategically focused, who can help provide context for the management team and sort of see around corners in anticipation of issues that maybe they're not thinking about, and encourage them to Socratically to steer them towards anticipating issues that they might not otherwise have seen. So that's one model of value add I've seen. Another is, they've got a lot of functional expertise, and if you want them to lean in and help you in some particular aspect of your business, that's been true here at Peloton, by way of example, on the supply side. Had some really valuable help from one of our board members in that regard. That can also be quite value added, but it's a from time to time sort of thing. Let me say, in my experience in sitting on boards, and I'm sat on many, no matter how hard you tried, you never really know my experience has been, you never really know what's going on inside of a company. So board members are entirely dependent on the management team and the CEO to assist in their understanding of the business. So as a CEO, you kind of get out as much as you put in. The more informed they are, the more value added they can be, and the less context they have and the less visibility they have, the less value they're going to be to you in your running of the business.
Can I ask, how do the best founders manage their boards? You've seen Reed manage a board, you've seen Daniel manage a board, now you manage the board yourself. How do the best founders manage boards? There's often big voices, big characters. How do you manage a board?
Well, I would say that founder-led companies have a different board dynamic than companies that are led by professional managers. I'm the professional hired gun, That's wholly different than a founder who's, bootstrapped the company, become an iconic leader, picked all of the board members in the room. For the longest time, I think the board members at Netflix didn't want Reed to not think they weren't strategic and value added. God forbid he walk around Silicon Valley and say something bad about one of his board members that would have trashed their reputations permanently. And so everybody's on their best behavior. And, let's take the Apple board. I mean, who was going to get in Steve Jobs' face about anything ever? Like, this just wasn't going to happen. Even when they were running it like a Depression-era company and they had more cash than the U.S. Treasury.
Is that not a failing of the company, though, when you think about it?
Well, yeah.
What is the point then?
Yeah, absolutely it is. But look, I mean, did the shareholders do well? They did fabulously well. I mean, they had a brilliant founder. And so the board should be enabling of that kind of unique talent. I'm just pointing out that those are uniquely different situations than the situation that most of us find ourselves in. And there you need to, invest in the relationships and invest in their understanding of the business and know when you need help and be courageous enough to ask for it when you need it. Instead of trying to hide it, be proactive about it as a CEO.
In terms of being proactive about it as a CEO, I spoke to one of your board members and they said you have this incredible ability to bring your glasses down and say the hard thing that everyone is thinking. Now, as a board member myself on the investor side, I struggle with this. I like to please people. How do you advise me on the right way to deliver tough news, if I bring my glasses down, and deliver that feedback in a hard but fair way?
Well, if you had less EQ, you wouldn't wrestle with it as much as perhaps you do. And I'm not blessed with the same degree of EQ as you are. And so I'm less self-aware when I do it. I mean, oftentimes it's just a question that's top of mind, and I think it's particularly relevant to the discussion. And so I just ask the question. I'm certainly not trying to be confrontational. I don't mean to do it in a confrontational way, for sure. If I could liken personalities to radio frequencies, some people are frequency agile, and they can deal with many different kinds of personality types, but some are not. And to be interpersonally effective, you have to find a frequency. You need to find a voice and a way of communicating with the CEO, particularly if they're a founder, in a way they're able to take it on board. They're raising an issue, or you're challenging them, or you're trying to get them to see something in a different way than maybe they're thinking about it. But in human nature, it's not. You need the same skill set to be an effective employee and, interacting with your boss, right? That's the art of it. So you need to get check your ego at the door and your intellect if necessary, and, find the interpersonal skills required to say it in a way that makes it accessible to the people or the person you're saying it to.
Can I ask one final thing before the quickfire? And I spoke to Daniel before the show, as I mentioned. He said the one thing I just had to ask you most of all was when he said, ask him about demand creation theory and your ideas about whether the market is efficient. That didn't really mean much to me. So I'd love to hear your thoughts, Barry, on demand creation theory and whether the market is efficient.
Okay. Let me try to parse that. Let's think back to Netflix. DVD by mail. Blockbuster is the gold standard. It was a retail model. They have 4,000 things in their store that they rent on an a la carte basis overnight. 90% of what they rent comes from what's called the new release wall. And the core thesis in the marketplace is that what consumers want to watch are new releases. Netflix has this revolutionary view of the home video market that's not true. That what consumers want to watch are movies they like, but they can't remember the names of them. And they rely on their friends to tell them what it is they should be watching. And they walk into the Blockbuster store and they use the new release wall to find something to watch, because the middle of the store, which has thousands of DVDs, is just, too imposing to actually flip through. And plus, you don't recognize any of the titles, so they don't mean anything to you. Okay, so 90% of what Blockbuster rents is new release. 30% of what Netflix rents is new release, and 70% is catalog. It actually, for the first time ever, creates a catalog content in the home video marketplace. And in the process of doing that, it developed an understanding of what Ben likes. It's different from what Harry likes. It's different from what Barry likes, and Gustav likes, and Daniel likes. And when you come to the website, the content that it serves you is what Netflix thinks you like. This is something that Daniel has invested in aggressively at Spotify. Okay, now, if it's really true that I know what you like, I can begin to shift demand. So if I have a limited number of suppliers and one of them is charging me a lot for my content, and one of them is charging me a little for my content, let's do Universal and Warner by way of example. Let's make this specific. So Universal thinks that the way it maximizes its profit is by maximizing its profit margin. And so its cost per movie is pretty expensive. But Warner takes a different strategic approach. They think the way they maximize their profit is by lowering the cost of their content and making it cheaper for you to buy. And if it's cheaper for you to buy, you will buy a disproportionately large percentage of it, and they will punch above their market share, which is in fact what happens now. That strategy only works for someone like Netflix if they're able to demand shift you from a Universal title to a Warner title without sacrificing your satisfaction. And as it turns out, there are a ton of movies that they can demand shift you to because they do know what you like and they can find something that's nearly similar to in Warner's catalog to something that you did want in the Universal catalog, and you won't even notice the shift. And as I say, in the process of doing that, they maintain customer sat. Now, I think we had 100,000 things to choose from, so owning demand creation becomes super important now. It's infinitely more important in the music biz because Daniel's got 100 million things for people to choose from, and you would love a bunch of them, but you're never going to find them because there's just too much stuff. But because he understands, your demand, or he understands, your likes and your dislikes, he's able to drive discovery and, drive this virtuous cycle. And he's able to demand shift so that when individual suppliers trying to extract margin from him, he can depress demand for their content on his website and shift to lower cost content from other people's. And in the process, he's been able to negotiate economic incentives with his various suppliers that reflect his ability to own and shift demand creation. So at a high level, I would say, it's kind of in summary, whoever owns demand creation owns the gross margin.
How do you do demand creation theory well without having supplier churn? Because if you do it well, everyone moves to lower cost of content, but then do you not get supplier churn on the higher cost, which then no longer have engagement?
Well, where are the suppliers going to go?
Create their own? Disney?
Yes, but think how many years it took before Disney underwrote the cost of trying to get there. But there are real barriers to entry associated with trying to build out your distribution to end users. And there are many examples of music labels, by way of example, who tried and failed. So almost all the music labels, let's take Sony, went down this path. And it wasn't until they went down the path and failed that they repositioned themselves and licensed content. Sirius XM tried to do the same thing. Starz tried to do the same thing and then pivoted and licensed. So Disney's one of the few examples of a company that had a brand that was umbrella, that was broad enough that consumers saw value in the brand broadly enough that they were willing to license the content as a subscription model. But many, many, many companies have tried and failed.
I think Disney, you're right, probably is one of the only ones who have that consumer brand recognition. But I do want to move into, I could talk to you all day, Barry, but I do want to move into my favorite, which is a quick fire round. So I say a short statement and you give me your immediate thoughts. Does that sound okay?
Absolutely. Let's do it.
So what books are capturing your heart these days?
I've said in my investor letters that turnarounds are full contact sports. And so I literally am working 24/7. And the only thing I'm reading is the New York Times, the Washington Post, and the Wall Street Journal every morning. I did find myself in Thanksgiving flipping through a Peter Kaufman book about Charlie Munger. But it's a long time since I've had the time to sit down and actually, read something.
Barry, the amount of times people come on my show and tell me about books and I pretend I've read them, I really don't have time to read either. I'm like, really marvelous. You've read that many books? Well done. So I totally feel your pain. Tell me, what do you believe that most around you disbelieve?
Aside from the viability of the Peloton business model long term, I have no idea.
What's your biggest strength and your biggest weakness?
Maybe at this point, strength is pattern matching skills, from all of the various business models and people that I've had the opportunity to work with. In this situation in particular, it has helped me move at speed. And I would say the biggest challenge are my interpersonal skills. I'm not the smartest guy in the room, but unfortunately for me, I have more IQ than I have EQ. And I would be a better manager if I had more EQ. So I try to compensate by surrounding myself with people who do have more EQ than I have, but I still have an EQ deficit.
What's the most painful lesson that you've gone through that you're pleased to have gone through?
I'm not pleased to have gone through any of the painful lessons. I guess, I don't know, I was in basic training in Quantico in what amounted to an ROTC program in college, same one that Reed Hastings had gone through. So I suppose that experience was very formative, but it was quite painful at the time.
I'm sure. What would your advice be to current CEOs going through the downturn with you?
Honestly, I wouldn't presume to have advice from my peers. I mean, I'm still unproven myself. Talent density is job one. Like, that's it. If there was one thing to focus on more than any other, aside from, the structure of your business model, and I can't emphasize the importance of that enough, by the way. It's the thing that helped us be successful at Netflix. It's the thing that propelled Daniel to success. It's the thing that's propelling us to success. It can enable real structural, sustainable advantage. It's people, because without them, you can't execute.
Barry, I can see why you didn't like being a VC. You're far too humble. VCs, I'll tell you what to do. I've got the answer for you. Yeah, I can totally see. Tell me, who's your favorite Peloton coach and why them?
I'm not going to answer that question because they're all my children and I love them all. I do. I mean, I thank God for the content team because, it's the thing that gives, it's the reason that we're still here.
I'll give you a different one. What's your favorite type of ride? Hitting hills? Are we a climber? Are we a low intensity? What are we going for?
No, I find myself riding a lot with Matt Wolperts and Ollie Love and a few of the other instructors, kind of in the 30 to 45 minute range, and in the, zone 3, zone 4.
Let's not go riding with Barry. That's the takeaway from today.
I'm in the lower 20%, just to be clear, all the classes.
Tell me, Barry, what board member have you been most impressed with over the years and why?
Well, the one I've worked with the most consistently is Jay Ho. I remember when Netflix was actually going down after the dot-com bust. We were running out of money, even though we were doubling every year. But the world was in meltdown. You couldn't get capital from anybody. And he stepped up in a moment of immense bravery to the long-term benefit of his investors, I might add. They made a killing. But it was a moment of great courage. And I have known him, through Spotify, through a number of really terrific, and Netflix and other, really lucrative investments. And he was responsible for bringing me here to Peloton. And he's been enormously helpful to me in stabilizing the performance of the business and moving it forward. And so, he would be at the top of my list probably.
Penultimate one, how do you reflect on your own relationship to money today, Barry?
Company money or personal money?
Personal money.
Don't really have one. Never see it. Don't think about it particularly. I do use it to make me more efficient in my job. I'm a little bit embarrassed to admit that almost everything in my life is optimized around my performance at work. And so if I need to, or if I can use my resources to make myself more efficient, then I do. This was something I saw Reed Hastings do very successfully at Netflix, and I've sort of emulated that.
What has been a needle mover there? I hired my mother as my chief of life. She made sure food is in the fridge, heating bills are paid, everything's done, cleaners come, everything's there. I never have to worry about anything in life. That's a breakthrough.
Yeah, well, that's it. I try to use my personal resources so that I don't have to worry about anything in life, and I get places quickly, and things are taken care of so that I can remain entirely focused on work and my marriage and nothing else. And now I'm not entirely proud of that. My personal relationships with friends and whatnot suffer as a consequence, but it does help enormously me be successful in my day job.
Final one for you, Barry. What do the next 5 years hold for you, and what's the plan ahead?
I can't see farther than my role here at Peloton, and the immediate challenge is to finish the turnaround. I've said publicly, I think the ship is turning, and there are lots of green shoots about which I'm super enthusiastic. I think we're on track to get the business to cash flow break even, which enables us to control our own destiny, as Andy Ratcliffe would say, cash is oxygen, oxygen is life. So, you got to husband that scarce resource, and we're doing that really well. And then the question is, how high is high? How quickly can we grow the business? What will the growth rate be? We still have to solve for all those things. And so I'll be here for a period of time where I figure that out. And then eventually, hopefully, I plan successfully for my successor and manage through that process well. And then I'll go off and do back to California and discover the rest of my life again.
I love it. Barry, thank you so much for doing this. As I said, I heard so many wonderful things. I'm thrilled we got the chance to do it. So a huge thank you for doing it.
Well, thanks for including me. It's been fun. And I've been a big admirer of your podcast for a while.